The government money printer, quantitative easing. Imagine playing a video game where you run out of gold coins, so you just press a cheat code and create more gold out of thin air. That's basically what governments do with quantitative easing. They literally create money on computers when they need more of it. When the economy crashes, central banks don't go digging for buried treasure or start a lemonade stand. They just open up their computer program and type bigger numbers into the money supply. It's like having admin privileges in the real-world economy and using them to spawn unlimited resources. The Federal Reserve can create billions of dollars by essentially Ctrl plus C, Ctrl plus V-ing money into existence. They buy government bonds and corporate debt with money that didn't exist 5 minutes earlier. It's the ultimate money duplication glitch. Except it's completely legal and somehow doesn't break the game. But here's the weird part. When governments create money out of nothing, it somehow doesn't count as cheating. When regular people try to create money out of nothing, it's called counterfeiting, and you go to prison. When the Federal Reserve does it, it's called monetary policy, and you get invited to economics conferences. The side effects include inflation, where everything gets more expensive because there's more money chasing the same amount of stuff. It's like if everyone in a video game suddenly had unlimited gold, bread would start costing 10,000 gold because everyone could afford to pay 10,000 gold. The credit card multiplication, revolving debt cycling. This glitch involves using credit cards to pay other credit cards in an endless loop, essentially creating money that exists only in the space between payment processors. It's like financial juggling where you keep multiple balls in the air and hope none of them fall. The basic strategy is opening multiple credit cards with different billing cycles, using cash advances from one card to pay the minimum on others, then transferring balances between cards to reset payment dates. You're essentially borrowing money to borrow more money to pay back the money you borrowed. Some people have managed to keep this cycle going for years, living entirely on credit while making minimum payments with money that comes from other credit sources. It's like running a Ponzi scheme where you're both the organizer and the only investor. The catch is that this only works until credit limits are reached, interest rates change, or credit card companies catch on to what you're doing. Eventually, the math stops working and the whole system collapses like a house of cards built during an earthquake. But for a brief moment, you're essentially living with unlimited money that technically belongs to you, but also doesn't exist yet. It's like spending future earnings that you might never actually earn, which sounds insane until you realize that's basically how the entire economy works. The real estate leverage loop. Strategy. Buy, rehab, rent, refinance, repeat. It's like playing SimCity, except instead of building virtual properties, you're building actual wealth by recycling the same money over and over again. This strategy lets you buy infinite properties with a finite amount of starting capital. Here's how the glitch works. You buy a distressed property, fix it up to increase its value, rent it out for cash flow, then refinance based on the new higher value to pull out your original investment plus some extra cash. Then you use that money to buy the next property. If executed correctly, you can theoretically build an unlimited real estate portfolio without ever running out of money because each property provides the capital for the next one. It's like having a money tree that grows more money trees. The magic happens in the refinancing step, where banks appraise your improved property at a higher value and let you borrow against that new value. You're essentially converting your labor and improvement skills into borrowing power, then converting that borrowing power into more properties. Real estate investors have used this strategy to go from owning one property to owning hundreds, all funded by the equity and cash flow from previous properties. It's like compound interest, but instead of earning interest on money, you're earning properties on properties. The risk is that if property values drop or rental markets crash, the whole chain can collapse faster than a poorly built house of cards. But when markets are rising, it's basically a legal way to print money using other people's money. The corporate tax inversion, offshore shell game. This is how multinational corporations essentially create money by making it disappear and reappear in different countries with better tax rates. It's like teleporting money to a dimension where taxes don't exist, then bringing it back when convenient. Companies create complex networks of subsidiaries in tax-friendly countries, then use accounting magic to make their profits appear in low-tax jurisdictions while their expenses appear in high-tax countries. It's like playing three-card Monte with international tax law. The basic trick involves licensing intellectual property to yourself. A company in Ireland licenses its brand name to its subsidiary in the United States, so the US company pays licensing fees to the Irish company, moving profits from the high-tax US to the low-tax Ireland. Some companies have managed to achieve negative tax rates, meaning they not only pay no taxes, but actually receive money from governments through various credits and deductions. It's like finding a glitch where the game pays you to play it. Apple, Google, and Amazon have perfected this strategy, legally avoiding billions in taxes by routing profits through countries like Ireland, the Netherlands, and Bermuda. They're essentially running money through a geographic washing machine that cleans off all the tax obligations. The result is that these companies can reinvest money that would have gone to taxes, giving them a massive advantage over competitors who actually pay their tax bills. It's like playing an online game where some players found a cheat code and others didn't. The insurance arbitrage, premium float strategy. Insurance companies discovered the ultimate money multiplication glitch: collect premiums today, pay claims later, and invest the difference. It's like running a casino where you know the odds and get to play with house money while the customers hope for the best. Warren Buffett perfected this strategy through Berkshire Hathaway's insurance operations. They collect billions in premiums, invest that money in stocks and bonds, and only pay out claims when bad things actually happen to customers. The beautiful part is that insurance premiums are paid upfront, but claims are paid out over years or decades. During that time, the insurance company gets to invest premium money and keep the investment returns, even if they eventually have to pay out the full claim amount. It's like borrowing money from customers at 0% interest, investing it at market rates, and keeping the profits. The customers think they're buying protection, but they're actually providing free loans to fund investment operations. Some insurance companies have generated more profit from investing premiums than from actual insurance operations. They're essentially hedge funds that happen to sell insurance as a side business to fund their investment activities. The risk is that if disasters happen faster or more expensively than predicted, the company has to pay out more than they collected. But when managed correctly, it's a way to turn other people's fear into your investment capital. The government subsidy farming, regulatory arbitrage. This glitch involves finding ways to get paid by governments for doing things that generate additional revenue streams. It's like discovering that the game gives you rewards for activities that also help you win the game through completely different mechanisms. Solar panel installations can generate money from selling electricity, plus government rebates for installing renewable energy, plus tax credits for environmental improvements, plus potential carbon credit sales. You're essentially getting paid 4 different ways for the same solar panels. Agricultural subsidies work similarly. Farmers can get paid to grow certain crops, paid again to not grow other crops, receive disaster relief when weather is bad, and get conservation payments for environmentally friendly practices. It's like getting multiple paychecks for the same job. Electric vehicle manufacturers collect revenue from car sales, plus government EV credits, plus zero-emission vehicle credits they can sell to other manufacturers, plus potential carbon offset revenue. Tesla has made more money from selling regulatory credits than from selling cars in some quarters. The key is finding overlap between profit-generating activities and government-incentivized behaviors. When these align, you can essentially double or triple your revenue by doing things that make money while also qualifying for government payments. Some companies have entire departments dedicated to subsidy optimization, essentially farming government programs for additional revenue streams that supplement their core business activities. The currency exchange carousel, international arbitrage. This glitch exploits the fact that currencies have different values in different places, and money can travel faster than currency markets can adjust prices. It's like finding price differences for the same item in different video game servers and trading between them for profit. Foreign exchange arbitrage involves borrowing money in countries with low interest rates, converting it to currencies in countries with high interest rates, earning the difference, then converting back. Japan's near-zero interest rates have funded decades of carry trade strategies. Cryptocurrency arbitrage works similarly. The same Bitcoin might cost $50,000 on one exchange and $50,500 on another exchange. Traders can buy on the cheap exchange and instantly sell on the expensive exchange, Pocketing the difference. Some hedge funds use high-frequency trading algorithms to exploit tiny price differences that exist for fractions of seconds across global markets. They're essentially faster than the speed of price discovery, making money in the gap between when prices change and when everyone else notices. The ultimate version involves geographic arbitrage, living in countries with low costs while earning money in countries with high wages. Digital nomads who earn Silicon Valley salaries while living in countries where those salaries have 10x the purchasing power are exploiting this glitch. The risk is that currency values can change faster than you can execute trades, turning profitable arbitrage into expensive losses. But, when executed correctly, it's essentially free money generated by market inefficiencies. The attention economy exploitation. Content monetization pyramid. This is the newest infinite money glitch, where people create content about making money, sell courses about creating content, and build audiences who pay to learn how to build audiences. It's like a pyramid scheme where the product is teaching other people how to build pyramid schemes. The strategy involves creating content about entrepreneurship and wealth building, attracting people who want to get rich, then selling them courses, coaching, and communities focused on building their own content businesses. Everyone is teaching everyone else how to do what they're doing. YouTube channels about making money on YouTube, courses about creating online courses, and coaching programs about becoming a coach. Each level sells the dream of financial freedom to the next level, creating an endless chain of people paying to learn how to get other people to pay them. The beautiful part is that the product being sold is often just the method being used to sell it. People buy courses about making money online from people who make money online by selling courses about making money online. Some creators have built million-dollar businesses by teaching other people how to build million-dollar businesses. It's like intellectual property that reproduces itself while generating revenue at every reproduction. The glitch works because everyone believes they'll be the one who makes it to the top of the pyramid, not realizing that the pyramid only works if most people stay at the bottom, paying the people at the top. The conclusion: reality's cheat codes. So there you have it. Every major infinite money glitch explained, from government money printing to attention economy pyramids. These aren't theoretical exploits, they're strategies that people and institutions use every day to generate wealth from seemingly nothing. The weird thing about real-world money glitches is that many of them are completely legal, widely accepted, and sometimes even encouraged by governments and financial institutions. The line between clever financial strategy and exploiting systemic loopholes is often just a matter of scale and legitimacy. What's really mind-bending is that the entire global economy is basically built on these kinds of financial engineering tricks. Banks create money through fractional reserve lending. Governments create money through quantitative easing. And corporations create value through accounting techniques that would be illegal for individuals. The people who get rich aren't necessarily the ones who work the hardest or create the most value. They're often the ones who best understand how to exploit the gaps, loopholes, and inefficiencies in financial systems. But here's the catch. Most of these glitches require either significant starting capital, specialized knowledge, or acceptance of substantial risk. They're not really get-rich-quick schemes as much as get-richer-quicker-if-you're-already-rich schemes. The ultimate irony is that the people who most need infinite money glitches, those struggling financially, are usually the least able to access them, while the people who least need them, those already wealthy, are the most able to exploit them. Still, understanding how these systems work is valuable even if you can't directly exploit them. At minimum, it helps explain why wealth inequality keeps growing and why the rich seem to have access to different rules than everyone else. Sometimes, the game really is rigged. You just need to understand how the rigging works.